If you look at where Bitcoin has stalled here, it's right at that level. Now, let's talk psychology of the markets, because this will be a great educational part.
Here's your dollar chart on Bitcoin. And again, I put in this longer channel. I'm just kind of curiously watching it to see. Longer upsloping channels do eventually break to the downside. But again, it was just something I was taking a look at there that we do want to keep an eye on as well. Now, short term, couple things to look at on Bitcoin. So let's get into Bitcoin and let's go here. Here's your dollar chart on Bitcoin. And again, I put in this longer channel. I'm just kind of curiously watching it to see. Longer upsloping channels do eventually break to the downside. But again, it was just something I was taking a look at there that we do want to keep an eye on as well. Now, short term, couple things to look at on Bitcoin here. So short term, we have taken out the FTX high. All right, now, again, whether or not we've confirmed, it doesn't really look like we've confirmed here, but we are consolidating a beginnings of a potentially bullish consolidation chart pattern. All right, so when you have sideways candles, that means a recent move is being digested. Think about, you just went to the buffet, you had a huge meal, you go back, you sit in front of the TV, you digest your food. You're not going to go run a marathon as soon as you eat the buffet, right? You're going to get cramps, you're going to feel disgusting, you're going to throw up. So the same kind of principles here apply to charts. And again, remember, charts are nothing more than representations of humans, right? It's millions of buyers and millions of sellers coming together with their emotional kind of mentality, and they're buying and selling. That's how charts are created. So essentially, you can really relate charting to basic things in the human world. Okay, so again, big buffet eaten. Now it's slowly digesting. I don't personally think it's digested enough, but it's starting to get digested. If we continue up, your upside is going to be 25,000. Now, 25,000 is a big level, not just for this pivot, but if we extend this line out, it also goes to that low right here, which was this last big drop low. So that to me is a big resistance. It's even bigger than where we currently are, which is at this pivot high, because it has a secondary pivot low here to kind of reinforce the nature of this resistance. So if we do go up, 25,000 to me would be an epically big level. Now, for me, I haven't shorted Bitcoin yet. In fact, I'm still long in verified investing crypto as we're riding this train up a little bit on that. But I will say this, is that I do have shorts out there. I have two shorts out there on Solana as well as Ethereum in these ranges, because the charts are looking more bearish, but they're also partial positions. And the idea being is that I want to essentially begin to accumulate for the bigger macro move to the downside that we probably get after this relief rally in asset prices. So again, if that continues, I think 25,000 at 25,000 for me personally, I will probably start inching in on a short position. Okay, next up, let's take a look at a couple other things here. So that's your short term on this. In the longer term, a couple things you want to just keep an eye on. Looking at supports, let's look at supports. So what if Bitcoin starts to roll over? This is a big trend line here, folks. Notice pivot to pivot to pivot all the way through here. So this little upsloping trend line would be a big one. And then if we do finally break that, which I do anticipate at some point, then this low pivot would be here. So short term, your upside is to 25 potentially. If we start to decline and we start getting below this area, you start watching for this upsloping trend line.
Yeah, so I mean, we've definitely had an impressive move on Bitcoin, right? So I mean, Bitcoin has finally woken up. I think that you see a lot of this hype building very, very quickly, which for me is a little bit of a, for me, this is very classic of a bear market rally. And that's why I'm a little skeptical. I had some longs going into this. I was talking about a potential breakout. We've gotten that, but I always said it would be a breakout that would get bulls to kind of jump back on the ship, but it probably is a shorter lived bull market run, intra bear market, right? So let me show my charts here, because I think there's some cool things to look at. So number one, if we see this chart here, right, this is the bull run that we've just experienced. Incredible, right? I mean, we haven't experienced this in quite some time, but number one, I mean, it looks big, but if we zoom out on the chart, I think it's important to keep it in perspective, right? This is what we're talking about. This is what's getting all the hype, is this move up in Bitcoin. And again, like you said, very normal, because people had been kind of lulled to sleep with no volatility. I think we had the lowest volatility in Bitcoin history. So it was kind of dictating something would wake things up. But again, you have to look at, okay, this is the down market and this is where we are right now. Is it anything yet to get excited about? And I'm going to tell you where I'm going to get a little bit excited. if we were to take out this high right here, which is the beginning of the FTX collapse, where we saw FTX, and all the fraud and all that come to light, that's where, if we could get above that psychologically, I think that would be a positive for Bitcoin. People will see an intraday move above or even a close above, get very excited, and then they'll wonder why price gets slammed back down. So you want to see price get above and actually stay there and consolidate there, right? And again, if you look at where Bitcoin has stalled here, it's right at that level. Now, let's talk psychology of the markets, because this will be a great educational part, is that why do these levels have so much resistance? And the answer is this. Over here, you had choppy sideways to up move. You started to make moves to the upside right here, right here. A lot of people were buying Bitcoin. And then all of a sudden, that floor got just pulled out from under them. And they saw their accounts drop by 25, 35, 45%. In some altcoin cases, it was 50%. And so what happens is when price goes back there, those people that saw their 10,000 account at 5,000, they're made whole again. And there's this psychological thing about saying, okay, I'm back to break even. Let me get out. Let me just walk away at this point. And that's why you have the technical resistance right at that level. So to me, this is the level I'm watching right around 21,500. Let's see in the next few days what happens. I actually put out a short signal on Ethereum yesterday when we were above 1550. I think we're in a position to see a pullback here. It was just incredible the last couple days, but especially yesterday, how you could see the shorts just where price went up $100 on Bitcoin in a matter of seconds because it was that short covering, just squeezing going on. And again, that's the key, is that, if you look at the stock market, and you've been around for a long time, Greg, is that, you see these bear market rallies that are they call them rip your face off rallies because they're so intense and they get so much excitement from bulls.
Maybe crypto as well here. And I'm going to explain. So what is very clear, and if you look at the stock market and basically we look at gold prices, we look at crypto, we know that as the dollar was rallying up, the stock market was selling. As the dollar has fallen, the stock market has rallied off its lows. So again, if you go back to the lows on the stock market, it's going to coincide basically with the highs on the dollar. So my point is, if we're coming into support on the US dollar, and support generally means we could see a technical bounce in the dollar, the extrapolation of that needs to take us to the idea that the stock market may be getting a little bit tired. Okay, so again, that's the key to kind of understand here. All right, and again, I'm not saying that the dollar is going to go back to all-time highs. I honestly don't believe that. I think the dollar is probably topped. But I do think even just a technical bounce in the dollar, like just imagine if we just go back to even this area right here, which will be resistance around 103.75, that would be a catalyst for the stock market to potentially sell off. Okay, so just a little tidbit on that. Again, I am short-term bullish on the dollar here for the next week or two, then we'll reevaluate. Therefore, for me personally, from these levels, S&P right now, Spiders is at 396.50. I'm going to be net negative. I'm accumulating essentially my portfolio. I'm slowly accumulating some shorts on the S&P, on the NASDAQ, with the full idea that we could have a short-term pop to squeeze weak hands out above that trend line I showed you. So again, when you're looking at swing trades, you start accumulating when the probabilities start to shift, in this case to the short side or the downside. It doesn't mean you go all in, right? We don't go all in here. We just kind of inch in. Then if it pops a little bit more, we inch in a little bit more. We build our core positioning, which then protects us from going all in here, and then it pops here, and then we freak out and we react emotionally. Remember, emotion is your worst enemy.
Thank you for watching this video. Don't forget to like the video and subscribe to the channel.